Hey, everybody, this is Al Stockwell. I'm the Life Marketing Director here with Simplicity Des Moines. Pleased to be joined by Jeremy Bickler. He's our Vice President of Sales. He's kind of our regional contact with NIW. And specifically today, we're going to talk about the KaiZen program. I'll let Jeremy do a lot more of the details on it. But KaiZen's been around a while. It gets a lot of interest. But I think relatively on its face, it's kind of a easy thing to understand, but there's a lot of details and a lot of information that kind of gets glossed over that I think is very important when talking about the process. So I hope this video webinar will help start some of the questions in your mind, and then answer a few of the questions, and then we'll be available afterwards if there's any questions. So with that, I'll hand it over to Jeremy. Thanks, Jeremy.
Thank you, Al. Appreciate the time, everyone. Today, first off, before we get started and jumping into the actual KaiZen platform, we get asked a lot, who is NIW? The industry refers to us as a premium finance vendor. What that basically means is we are an organization that partners with groups like Simplicity Des Moines for leveraging opportunities. We have several platforms, traditional finance. We've been doing this, for almost 25 years now. We lent successfully through the 2008, 2009 banking crisis. We have over 5 billion in loans currently in force. What we do is we provide case design, economic stress testing, policy monitoring, loan servicing. We're basically a plan administrator with the carriers and lenders up until that client pays the bank back, which with KaiZen is typically 15 years. So just think of us as a plan administrator, if you will, that gets brought in as a partner along with your FMO. So I mentioned we have several platforms. The one that we are most commonly known for is KaiZen. So that's the one we're going to focus on today. Oddly enough, KaiZen was started, even though I mentioned we've been doing this for 25 years, KaiZen's been around going on 10 years now. KaiZen was never originally brought out to be mass produced for the mass market. KaiZen was an initial strategy that was brought on for NIW employees and executive leadership group. In lieu of a typical 401k match, year-end bonus, et cetera, they wanted to do small case leveraged IUL. They wanted to offer that as an employee benefit. So NIW created KaiZen. So the first KaiZens that were ever in force is actually NIW leadership. We took it to our lenders. Our lenders were super excited about it. They wanted to participate, and it blew up from there. And here we are 10 years down the road, funding a multi-million-dollar tranche every 6 weeks here. So why I bring that up is KaiZen in and of itself has not changed. Obviously carrier products change, et cetera, but the KaiZen design is the same as what we created for ourselves. It is optimized for the lowest costs, utilizing a leveraging platform, but in a completely unique way, and we'll go through that. So I think it's important when we hear the words premium finance, depending on your experience in the industry, sometimes there can be some negative connotation to that, especially if clients get on their Google machine and see that. So there's some very distinct differences from KaiZen. And we actually ask that if you are experienced, you actually take a step back and look at this through a different lens. So I think it's important. What I'll do now is kind of go through the differences. And I'm not saying one is bad and one is good. I'm just pointing out there are very obvious differences between what we would call a traditional premium finance platform. So first and foremost, on our platforms, when we talk about traditional premium finance, we're starting at a 10 million net worth. So this is clients typically that have a very large estate tax liquidity or tax concerns. So we're talking about 10 million plus net worth. So right out of the gate, you're talking, that's a much smaller percentage of the population there. There is going to be full underwriting for the loan. So just like when you buy your house or you buy a car, you don't just have your traditional underwriting at the carrier level medically, you also have full financial underwriting for the loan. The client is actually signing personal guarantees and they are on the risk or on the hook for collateral or interest exposure. So when there's a shortfall between the policy cash value and the loan, the loan value is higher than the policy cash value, the client has to post collateral in the form of a liquid asset there. Because we're adding that risk, a value proposition is needed. So the insurance needs to be obtained at a lower cost, typically less than 50 cents on the dollar. That's where we come in with the design. So again, that's traditional premium finance. We do this stuff all day long. Should you have any clients there? But again, that's different than KaiZen. So let's start to look at where KaiZen distinguishes itself. First and foremost, we're not talking about 10 million plus net worth. Depending on the carrier, you're starting at 100,000 plus household income. So right out of the gate, you have a much, much broader audience. And we've actually, per the data, we're talking over 10 million households, literally, that make above 100,000. So again, you have a much bigger opportunity. We're talking about KaiZen. Unlike traditional finance, there is no loan underwriting. Your client is not actually the one borrowing the money. So there's no collateral. Your client is simply agreeing to pay a percentage of the premiums, years 1 through 5. You're simply giving your client 60 to 100% more for the same investment they already committed to do. KaiZen is primarily an income play. 95+% of our sales, the main goal is income. Yes, we're using an index universal life as the vehicle. And yes, there is death benefit because it's life insurance at the end of the day, but the primary goal is tax-free income. So what is KaiZen trying to address where we see the problem? Again, I mentioned it's an income vehicle. When we talk about income, output in retirement, the where you invest, what I mean by the where, the product you're using, the yields you're getting, of course, that's important, but that is actually only affecting 26% of your output or your income in retirement. Even though that's only affecting 26%, that's where this industry has been focusing on, dominating the conversation. I know even money managers, when I have a money manager that approaches me to move my assets over to them, they all sound the same. I can get you a better yield. I can get you a safer yield. I can get you lower fees. Again, very important, but at the end of the day, that's only addressing 26% of the problem. What affects 74% of my income in retirement is how much I invest. This is common sense, right? If I invest more, I'll get more, but that is not addressing the problem. We as a collective industry are not addressing the 74%. We continue to talk about the 26%. Even the retirement community, it talks again solely about that 26%. So let's put that in context. The average US citizen saves at a clip of about 3 to 5%. That's the average. Highly compensated, which per the data is about 225,000 or higher salary, they save at a clip of 9 to 12%. Let's use myself for an example. I'm a 47-year-old male. I've got a kid in college, kid in high school. I'm a former business owner. I started saving late. If I use a boilerplate retirement model, and that retirement model would be, I want to live off of about 80% of my income in retirement, and the average retirement is about 22 years. I would need to be saving at a clip of 30 to 35% to maintain that standard. Again, 80% of my income with the 22 plus years in retirement. I think we'd all agree that's a ridiculous ask to ask a client to save 30% of their income. Again, the 74% that's affecting it is the how much. Per the data, Americans are drastically under saving. KaiZen is designed to tackle that specific problem. Let's take the 9 to 12% you can save and leverage up to 3 times that. Let's catch you up using other people's money. Let's address the 74%, but instead of asking you to save that 30% that you needed because you started saving later, weren't saving enough, we're going to use leveraging. Because of that leveraging, participants receive anywhere from 60 to 100% more tax-free income, depending on your age. And because it is life insurance at the end of the day, It increases the valuable protections, obviously death benefit, wealth transfer, living benefits. Now, this is important, and this is really where KaiZen starts to distinguish itself. We compare KaiZen much more in line with a mortgage than we do traditional premium financing. I think you'd all agree if you're talking to a homeowner, you ask them, did you pay cash for your house? Of course, they said no. I think 99% of people did not pay cash for their house. They utilized a mortgage. If I have $300,000 in my pocket, I'm not going to go pay cash and buy a house for $300,000. I'm going to put that $300,000 down and buy a house for $800,000 or $700,000 or $900,000. I'm going to utilize a mortgage to buy a bigger house, a better house, one that suits my needs. As a matter of fact, as Americans, we do this every day. Home loans, car loans, boat loans, home improvement loans, lines of credit, margin loans. We utilize a leveraging strategy to drive a nicer car, live in a nicer house. I'm going to build a deck. I'm going to do a large landscaping project. I might just, do a refi on my house, right? A home improvement loan. This is the same concept, but we have not been doing it for our benefits. And that's where KaiZen comes in. We're going to take the tried and true concept of a max funded index universal life plan to generate tax-free income, but we're going to leverage on top of that 3-to-1. However, we're doing it in a completely different way. And this is another reason KaiZen completely distinguishes itself from any other finance platform out there. There is no loan documents. There is no credit checks. There is no personal guarantees, and there is no interest payments. Your client is not a party to the loan. They're not the ones borrowing the money. Just like in your mortgage, your house is the underlying appreciating asset for collateral. With KaiZen, the policy is the collateral. So how do we accomplish that? Well, the piggy bank's flying in here with the parachutes. That's the leverage dollars. So your client is going to pay roughly 50% of the premiums years 1 through 5, and will leverage the other half. At the end of 5 years, your client is done. Your client's out-of-pocket obligations is complete at the end of 5 years. Then years 6 through 10, we will leverage all of the premiums. So because we're not borrowing all of the premiums like traditional finance, this allows the policy to be the collateral. So we're going to do a max fund IUL with your client paying roughly half, years 1 through 10 or 5, and all of the premiums financed. So KaiZen is always a 10-pay, and your client is always, depending on age, paying roughly half of those premiums. Because of that funding ratio, it also protects the lender. If we have underperformance of the IUL, if we have a rising interest rate environment on the bank loan, it ensures there's enough cash in the policy because, again, years 1 through 5, we're not borrowing all of the premiums. So let's move on here to an actual case design. I think this is a little more important here. Okay, a lot of numbers on the screen. So let's take one column at a time here. By the way, this is a very typical KaiZen design from a volume perspective that we see. This is on a 45-year-old male. So first and foremost, column A, this is actually the bank loan. It is a LIBOR-based loan, LIBOR plus 175. Now we have had some rate spikes here, so the current rate is a little bit higher than that, but you're going to see the rate going up. We use a forward rate curve, and this is something that is going to be dictated by our carriers, typically pulled from like a Bloomberg.com. So we're not going to assume we're going to stay in this low interest rate environment, and you're going to see those rates creep up. Column B is if you are actually looking at the carrier's illustration. So you're going to see that represents the actual premium going into the policy. So in this case, $102,000 a year, 10-pay. But what's going on behind the scenes is, in this case, your client is paying roughly $48,000. So the client pays $48,950, and then we leverage $54,000 on top of that. That's going to happen for 5 years. Client pays 48. The trust goes and borrows 54. Years 6 through 10, again, your client's done at the end of the 5th year. Another attractive feature of that, your client is simply budgeting an annual premium for 5 years. Years 6 through 10 will borrow all of the premium. So when we talk about that 3-to-1 leveraging in column C, that represents the borrowed dollars. So if this client would have just paid $48,950 a year for 5 years, he'd have roughly half the death benefit and about 80% less income if we wouldn't have used those dollars in column C. So column D there, that represents, first and foremost, we have to let this cook a while, right? So we're talking about a 15-year deferral. So I mentioned this is an income vehicle, so you're typically going to wait 15 years. So those are the two things that are most important, is your client's paying for 5 and they're waiting for 15. So column D there, that 1.1 million, that represents a loan from the IUL to pay the bank back. Now this policy no longer has a collateral assignment and your client can start taking an income stream at any time they want. In this case, if you look at the far bottom right, age 65 is when we started. In this instance, client's taking $92,000. That's tax-free. Now that goes all the way out. I just didn't have the room on here. That 92,000 will run all the way out. So again, we utilize the others people's money that we talked about. Again, like in a mortgage where you're going to put 25% down or what have you, we're going to borrow on top of that. And instead of getting you the nicer house or the nicer car, we're getting you an IUL with more death benefit out of the gate, more cash value, even though we have to pay the bank back, because that borrowed dollars is compounding interest. It's getting, in this instance, about 80% more income on this 45-year-old. So again, when we're talking about what makes KaiZen unique, it is that design. Our designs are proprietary, so without getting into too much detail, we are not doing a simple, minimum option B switching to A. It's much more robust than that from a cost mitigation standpoint. The amount of client contribution matters. We are not just borrowing all of the premiums like traditional finance. Your client's paying more of the premiums 1 through 5. We're utilizing things such as term blend and death benefit reductions. And again, as the plan administrator, we are around for that. It is turnkey for you. Even if you don't have a relationship with your client in year 10, we are going to be there to do that annual loan servicing. We do the stress testing as well. We'll get into the stress testing more in a moment here, but we stress test above and beyond what any carrier asks us to do. Because of all this, there's less exposure to the client. Funding ratio protects the lender. There is no loan documents, no personal guarantees, no collateral calls. We only need, when we start talking about premium finance simplified, the money we borrow has to earn a higher interest rate than the cost of the money, right? The leverage dollars needs to earn a higher interest rate than the cost of the loan or the interest rate on the loan. Typical premium financing needs about 2+%. KaiZen, because it's a different risk profile and we're not borrowing all the money, only needs about a 1% risk spread. So it's much more resilient. Again, NIW is there for the in-force maintenance, the policy service, loan service. Right now, and this is per our carrier data, we have a 96+% persistency. That's not 4% a year. That's total 96+%. So we basically less than 0.5% of the thousands and thousands of policies that are in force have fallen off the books. So again, from a persistency standpoint, it's sticky business and there's success for your clients. All of this is just ultimately driving down risk, and we're utilizing leveraging in a much less risky way. So who's a target client profile? We're talking about the highly skilled, someone who started saving late, or again, I mentioned even in my own instance, I hadn't been saving enough through my 30s. Somebody who's maxed out their qualified contributions, somebody who is concerned about taxes. Some examples, and obviously it's not limited to this: business owners, doctors, financial services, tech industry, engineers, small business owners, advisors themselves. You'd be surprised how many KaiZens we have that the advisors take on themselves or put on their wives. So this is a very typical market. Again, certainly not limited to this. So when we talk about the tools to promote, we have a website once you sign our selling agreement, and any questions on that, I'll make sure Al has the selling agreement. You guys can reach out to him and he can get it to you. Once we get that in, we give you access to a website that has marketing materials, canned illustrations, video links, everything you need. But the second bullet there is the one that I want to talk about now. We have a preferred platform that is only available to our preferred partners. Now, Simplicity Des Moines is a preferred partner. Because of that, you would have access to the Ilia platform free of charge. Ilia is simply an acronym for Interactive Learning Information Assistant. It helps you promote and sell KaiZen. So let me actually show you real quickly what Ilia looks like. So every advisor will have their own Ilia website. This is mine. That's why it says welcome Jeremy here. So first and foremost, when I'm on the website here and I have a prospect, maybe I'm sitting in front of that prospect with my laptop or my iPad, or we're doing exactly what we're doing now. We're screen sharing over the internet. I can go here to client presentation. The two carriers involved in this, by the way, are Allianz and National Life. So let's just say I want to promote KaiZen using Allianz as a carrier. Again, National Life and Allianz have both been with us for 10 years, long-standing history, very, very familiar with the KaiZen platform. First and foremost, this is a front-to-back presentation now for you to present on KaiZen. There's a brief video here, and again, we won't show the video in the interest of time here, but this video basically just talks about why KaiZen and what the benefits it provides. And now we can go into the benefits estimator. Remember, on the front end, I am simply trying to get the client to commit to getting medically qualified. Of course, we're going to run the final design and full carrier illustrations, but we do not want to show that client the 50-page War and Peace novel that is the carrier illustration. You're simply showing them numbers. So what I do is I go in and I say, let me show you what KaiZen has done for me. And I actually input my numbers on the KaiZen I own. It goes through the piggy bank story here. I took my contributions and added lending dollars on top of that. So we're going to take over the next 10 years. We'll take my 250, add another 782 on top of that. There'll be over $1 million into the plan because we added that 3-to-1 leveraging. So what did that get me? First and foremost, it got me almost $1.5 million of death benefit out of the gate. My potential distributions at age 65 is almost $79,000 tax-free. If I do a screenshot at age 90, I will have taken $2 million in tax-free distributions, and I'll still have $1 million in tax-free wealth transfer. Based on my dollars, my $50,000 a year for 5 years, that's a 9.22% internal rate of return on a vehicle with no downside risk. Then I can go in and I can do a quick comparison. The blue bars here is the total distributions. The yellow is the death benefit. So it takes KaiZen, IUL with no leveraging, after-tax investment earning the same return, and a tax-deferred investment earning the same return. Now notice there is no yellow bars here on the after-tax and the tax-deferred because they both ran out of money. Then I can go in and talk about financial solutions. You're concerned about not saving enough. This plan catches you up with leveraging. You're concerned about taxes. Per the tax code, this plan provides tax-free distributions. You're concerned about medical emergencies. Again, the underlying asset provides living benefits. Concerned about market declines. Again, the underlying asset has a 0% floor. Here's a nice one, a benefit to the plan. If you're concerned about creditors, every KaiZen plan, regardless of where your client lives, is a Nevada sale because the trust we set up is a Nevada trust. And the trustee, which is Provident Trust Group, you can Google them. They have over $4 billion in assets. They're one of the largest fiduciaries of life insurance in the country. Their job is to take the client's money and go secure the borrowing and send that to the carrier. Because we utilize a Nevada trust, it's a Nevada life insurance policy. Assets in life insurance in Nevada are free from creditors. You have an added benefit there. And if you're just flat out looking for diversification above and beyond your typical stock bond split. Then it actually goes in here. You can do a real quick indexing 101. We'll take your premiums. The majority of them go towards driving cash, interest potential, tax deferred growth, income tax redistributions, and a small percentage goes towards the expenses. It utilizes an annual reset design. Each year's gains are credit and compounded. You go up year one, up year two. You cannot go backwards. Each year's gains locked in. So again, it's talking about that ratcheting design that we get in indexing products. This talks about caps being the quote unquote cost of a 0% floor. So again, we're just simply talking about indexing here. And again, this just continues to hammer home why the 0% floor is going to help you out. We're taking that concept, and again, we're going to hammer home the leveraging here. That piggy bank story, how we're adding $3 to $1. But we're doing it completely different. No interest payments, no loan docs, no credit checks, no personal guarantees. Because of that, depending on your age, we're going to get you 60 to 100% more than if you were straight funding out of pocket. Again, the upper affluent have the capital to drive nicer cars, buy nicer houses. We're simply doing that exact same strategy, providing leveraging dollars or using other people's money. We are acknowledging we're adding risk. This is really important. So we're not just going to do a typical normal market conditions with the IUL returning 6 in the current interest rate environment. First off, we will take the two worst environments ever in our economic history, 1980 to 1995, when borrowing rates were double digits. Mortgages were as high as 18%. LIBOR was up above 13. So we actually take the actual numbers from 1980 to 1995. Then we do the Great Depression era. This is the worst economic environment ever for market returns, 1930 to 1945. The IUL would actually return 9 zeros in the first 12 years. So again, 9 zeros in the first 12 years. Every KaiZen design has to pass both 1980s interest rate borrowing environment and Great Depression era returns. Then this goes into plan details. We have client testimonials out here. These are all actual client owners, written testimonials, video testimonials. And then there's a convenient frequently asked question portal. So everything from the bank loan questions to performance, trust questions, medical underwriting, everything, the vast majority of any questions you're going to be asked is all in the portal here.
Hey, Jeremy.
So yeah, go ahead.
Just to kind of reiterate, this stuff is all designed to be shared with the client or potential clients, right?
This is exactly what I'm going through right here, Al, is exactly the presentation. So what I just went through, starting with the introduction video, the benefits estimator, the financial solutions, what the advisors have done, the clients that are, or the advisors that are selling a ton of this, have this narrowed down to about 15 minutes. They're talking about the video. They're going through the benefits estimator, talking about their numbers. They're going through financial solutions. And this is what they're doing, Al. They're saying, I can give you access to this site. I can email you a link where you can go out and mess with the benefits estimator. You can listen to some of the client testimonials, look at some of the FAQs. And of course, your client's going to say yes. So what the advisor does at that point is he goes in and he hits create new invitation. You're filling out basic information here. Client name, cell, age, occupation. And again, it's asking for income to make sure you're not sending to people who don't qualify. You fill this basic information out, and they'll do this whether they're right in front of the client or on the line. They'll say, okay, I'm going to send you the invitation now. Open up your email. Did you get it? I will show you what that looks like. I sent one to myself. So this is my, go ahead.
Thank you. I just want to jump real quick. I wanted people to understand that this, I mean, it's all, you mentioned it earlier, turnkey. So agents, if you listen to this and you like it, but you're afraid that you might not be able to explain it, you don't have to. The presentation does it all for you. So with that.
Exactly. Yeah, you don't need to be the expert. We're providing the platform for you to present front to back KaiZen. We're not trying to, hey, take this complicated loan design, take this 50-page illustration. No, on the front end, you're going through this presentation. You're doing it in about 15 minutes. And you're saying what I just said is you're saying, I'm going to send you an invitation and give you access to this site. So again, when I create that invitation, I sent one to myself. So I'll show you what this looks like. When you get your page as the advisor, you can, complete your profile, put your picture in there. So it's going to say, Jeremy Bickler has invited you to learn about KaiZen. Whatever your name is, Joe Agent, Jane Agent has invited you to learn about KaiZen, and simply talks about how the rich are utilizing leveraging to drive nicer cars, drive a nicer, or live in a nicer house, etc. If it's got the video, if the client clicks here, learn more and estimate benefits, now your client goes into that portal that I just sent you. So your client is sitting at home now. He or she can watch the video. He or she can mess with the benefits estimator. He or she can watch the testimonials. And here's the cool part. If they click here, they can continue to enrollment, and it links them to straight 100% paperless enrollment. Your client can actually enroll on KaiZen from here. You're not taking paper apps. You're not going to the carrier website. You sent your client a link and he or she can go straight into enrollment from here. Let's go back and say, okay, I sent this Jeremy guy one. I want to see what it looks like. So again, we're back on your main page now. If you go to client management, remember I sent Jeremy one. If I sent 5 of these out, if I sent 10 of these out, they're all going to show up here. So I want to follow up with Jeremy. I sent him this link. So first I can click on his name and I can go to participant status and it'll tell me, okay, Jeremy opened the invite. Jeremy created an account. Jeremy has started enrollment. I can even go in here to enrollment details. If this is a client of mine, I can go through and fill the bulk of the enrollment out for the client. So what you have here is you have a way to present to KaiZen a straight front to back presentation. You have a invitation to completely link 100% paperless, all DocuSign. By the way, we pay all the DocuSign fees. This is free to you. And then it also becomes a CRM, a client management software for all of your KaiZen clients. There's marketing materials in here, training videos, our online webinars. So again, you will have access to all of this, again, because Simplicity Des Moines is a preferred IMO with us. So this is a lot of information. I know a little bit tough to digest, but this is why a lot of advisors have successfully implemented KaiZen into their practice, because they're not having to become the expert. They're utilizing this platform, and they don't feel like it's taking away from all the things they're already doing that is successful. They're not having to stop doing this to try and implement KaiZen. They have the track to run on here with access. You have everything from a client presentation to creating invitations. There's other marketing links here. And again, in the interest of time, this is stuff we can talk about more as for those agents that end up getting on board. But this will end up being your platform. And basically there's paperwork, and Al, when we get done here, I'll make sure you have, there's a fillable PDF. It's a boilerplate NDA that goes through our agent splits and says you're not going to steal our marketing stuff. And if you have access to our materials, you're not going to go take them to another premium finance vendor and copy them. And basically you're signing that, filling that, sending that back to us, and we get you hooked up with this site. So Al, I don't know if you have any questions, or if you feel I missed anything that you would like me to address.
No, that's perfect. I appreciate it, Jeremy. That's it's good stuff. I've had access for a while to this, and I'm guilty of just not getting the word out, and I'm getting the questions from the folks out in the field about this more than I'm pushing it. So I wanted to, get Jeremy back on the line here. Jeremy's been good to get me up to speed on these things. And so any questions, just give us a call. The primary 2 carriers Allianz and LSW, we do a lot of business with them as a company. If there's underwriting questions, we got that. We can help you with that. We've got our underwriters on staff here. So don't feel like if you got a client that's got some health issues that won't be suitable for it, you can always do the spouse and maybe I should ask that, Jeremy. Let's say you've got a high income earning spouse, uninsurable. We can utilize their spouse with the same income.
Yeah, because they go off of household income. So
Yep.
Good question, Al. So number one, let's address the underwriting part because I didn't mention that. Because we are utilizing leveraging, the client has to be standard or better. You can probably make an out-of-pocket IUL work, but we can't do table ratings or flat extras. So you got to be standard or better. And then if you have those instances, I mentioned, I'll use National Life for an example. They start at $100,000 household income. It is fairly common in a lot of instances where they will do a spouse. Maybe that's a non-working spouse. The main thing is they're still going to make sure from a financial standpoint, they're not going to want to see a ton of death benefit on the wife. But if you're doing the typical KaiZen, that's maybe $1 million death benefit or so, we're not having any problems at all from that standpoint. So yes, very, very common to put it on a spouse, especially if the husband is uninsurable. Or gets a table rating or what have you. So typically not an issue there. So
great. Thank you.
You bet. You bet. All right. So Al, what I will do is I'll just make sure you have it. I'll email you that selling agreement. Any advisors that are interested, want access to any of our materials, Al will email you the selling agreement. You fill that out, sign it, email it back, and we can get you hooked up. So, okay.
Awesome. Thank you, Jeremy. I appreciate it. Anybody listening? Yep. Just give me a call, 800-747-5612, and we'll be glad to talk about it. Thanks.
Thank you. Appreciate it. Take care, everyone.